Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for Wednesday, May the 3rd here. And today we are doing our midweek review. Let's quickly jump to our news items for today. Today, Wednesday, we have G7 meetings, ADP non-farm employment change at 8:30, and we have the ISM non-manufacturing happening on this morning at 10 a.m. in the morning. Of course, the rest of the week, unemployment claims. They're expecting a few less people claiming for unemployment this week. And other than that, the market continues its continual feverish, at least in the S&P 500 indexes. Just unrelentless continuation of up movement in spite of all the situations that are going on in the country. And as far as the reporting is concerned, market continues to show exuberance as a combination of, number one, a lot of great movement in a lot of sectors within the stock market, things like technology, things like paper manufacturers, those types of biomedical and hospital firms. Market seems to be reacting positively to the fact that the coronavirus deaths have decreased. The number of cases are beginning to be reduced. We just received news from Spain. They had their first day with no deaths. So everything is beginning to slow down in reference because we contain it pretty well. Secondly, the reopening of the economy. You continue to see things start getting better and better and better. Here in the state of Florida, things are moving rapidly. All kinds of restrictions over access to beaches have been rescinded. We're expecting to be at a higher productivity rate by the end of this month. As a matter of fact, I was out to dinner yesterday at a really popular restaurant in the area. They're expected to be at full menu and full staff by June 10th, which is a little less a week ago. So things in Florida are moving real quickly. And I believe in most states and in most counties throughout the country, things are beginning to move a little faster. Now, big states, big population states like, New York City, Los Angeles, places like San Francisco, places like the big cities, Houston, Miami, still continue because, and it's obvious, the population is a lot more difficult to control. It's been moving a little slower, but they're still beginning to slowly and surely start reopening things. On top of that, the stock market has discounted a lot of the negative activity, a lot of the negativity that was, a lot of the negative news that was postulated out there in reference to coronavirus. And a lot of the people in the market felt it was just a bit exaggerated. They were expecting, millions and millions and millions of deaths, 40 million, 50 million. And I think the market is pretty much recovered. And you have to remember the before and after this, okay? Before February 20th, the whole economy and the market was something different. And Americans in this economy wants to get back to where we were after being so violently interrupted by this virus. So I think that's what some of the exuberance. Does that mean it's all going to be peachy and beautiful from this point forward? Not necessarily, guys. We still have a lot of room to profit take. We still have a lot of room for retracement. So it can get bumpy, but the trend itself is going to continue essentially for the upside. Let's take a look here at one of our other time frames here so we can get a better look, closer look at what's happening in the market here as we continue to hold this trend line. See how the market just broke through this compression, held support, and now it's continuing to move higher and higher and higher, heading towards our ultimate goal, which are the all-time highs right up here, about 3,300 and change. Right about here is where we're expecting the market to head. We don't know when this is going to happen. It can happen before the end of the year. It can happen a little later. It can happen sooner. It's still very fluid in spite of the market exuberance, in spite of all the good news that we're receiving. It's still a very fluid situation. But you as a trader cannot fight with the market. You need to trade the reality in the market. And guys, as a technical trader, the market is always right. As a technical trader, the market is always ahead of the economy, is always ahead of reports, is always ahead. So if you are a true firm technical analyst, you just have to trade what you see in front of you. And speaking about trading what you see in front of you, what does this today look like? Well, we're above the intraday high of yesterday and holding support. every time that the market retraces, tries to find a support, market just blasts right through it and it continues higher. So there's your dip, higher. Here's your dip, higher. Here's your dip, higher. So what do we got to trade? We got to trade the dips and go long. Can the market move lower? Absolutely. Key areas to keep an eye on. This trend line here. Anything below that trend line here, next support is going to be down here. If this market holds here, then you just got a Fibonacci extension it up to the upside. That's where the market's going to continue. Slowly but surely, just going to continue up. If the market breaks this level here, and it breaks this level here, our next levels are pretty much marked right here. Here's where it is. This is exactly where we're going to be moving. So keep your eyes open on this particular price level here. Don't fall victim to a lot of the gibberish you had out there. As a trader, keep your eyes open on price action, and the price action will definitely set you free. Take care. Have a great session. Let me know if you have any questions.